Hello and welcome to the latest news update on Canary News. In a recent post on the platform formerly known as Twitter, Elon Musk revealed that Neurolink, his brain-machine interface startup, has successfully implanted its device in a human patient. The procedure reportedly showed promising brain activity, and the patient is said to be recovering well. Neuralink's ultimate goal is to establish a connection between human brains and computers to address complex neurological conditions. While Elon Musk's announcement is significant, experts emphasize the need for caution and long-term evaluation of true success. Several other companies, such as École Polytechnique Fédérale in Lausanne and BlackRock Neurotech, have also made strides in brain-machine interface technology. Independent verification of Musk's claims and details about the procedure are yet to be provided by Neuralink. The company has previously faced criticism for its animal testing practices. The breakthrough involves the placement of 64 flexible threads, thinner than a human hair, on a brain region controlling movement intention. The experimental implant, named telepathy, aims to enable device control through thought and is initially targeted at individuals who have lost limb function. However, commercial availability of such devices is still years away, according to experts. Switching our attention to crypto news, Bitcoin is poised to achieve its fifth consecutive monthly gain, marking its lengthiest winning streak since the pandemic-triggered rally fueled by loose monetary policies. The largest cryptocurrency has seen a 2% increase in January amid notable market fluctuations tied to the launch of the first U.S. spot Bitcoin exchange-traded funds and evolving perspectives on monetary policy. This 5-month run would be the lengthiest since the October 2020 to March 2021 period. January saw the introduction of spot Bitcoin ETFs by issuers like BlackRock Incorporated and Fidelity Investments, influencing the crypto market. Bitcoin, having reached a record high of nearly $69,000 in November 2021, posted a 12-day drop of around 21% after the ETF's launch. The transition of the $21 billion Grayscale Bitcoin Trust into an ETF on January 11 led to initial fund outflows, but the rate of withdrawals has eased, contributing to Bitcoin's recovery. The positive shift in sentiment from the slowdown in Grayscale fund outflows is noteworthy, according to Sean Farrell of Fundstrat Global Advisors. As the crypto community awaits the Federal Reserve's interest rate decision, Bitcoin's sensitivity to changes in market sentiment and liquidity perceptions may be influenced. At the time of reporting, Bitcoin is trading around $43,340, while other cryptocurrencies like BNB and Cardano show mixed performance. In other international news, China's stock and bond markets are sending a clear signal to policymakers, indicating the need for additional measures to restore investor confidence. Stocks experienced a third consecutive day of decline, offsetting last week's brief rebound driven by optimism regarding a market rescue package. Simultaneously, the benchmark 10-year bond yield reached its lowest level in over 2 decades as traders anticipated increased monetary stimulus from the People's Bank of China to stimulate economic growth. Concerns over China's economy have deepened due to the ongoing liquidation of debt-ridden China Evergrande Group, amplifying worries about the troubled real estate sector. Investor optimism remains scarce as major companies report disappointing earnings, coupled with resurfacing geopolitical risks ahead of the upcoming U.S. presidential election. Morgan Stanley strategists emphasize the market's concern about the adequacy of current stimulus measures in addressing the deflationary environment, calling for a major fiscal package targeting consumers. On Tuesday, the Hang Seng China Enterprises Index, reflecting Chinese stocks listed in Hong Kong, declined by 2.5%, emerging as the worst performer in Asia. The CSI 300 index also closed down 1.8%, despite overseas investors buying around $243 million of mainland shares on a net basis. China's 10-year bond yield slipped to 2.46%, the lowest since 2002, reflecting increased demand for safe haven assets amid expectations of continued economic pressure. The persistent decline in equities signals investor reluctance to embrace gains without bolder steps from Beijing. While initial enthusiasm followed reports of a stock market rescue package and the BOC's decision to cut the reserve requirement ratio, the rebound has proven short-lived. The Bloomberg intelligence gauge of Chinese developers fell over 4% on Tuesday, already down nearly 16% in 2024. The challenges facing China's property sector, coupled with ongoing market uncertainties, contribute to a lack of investor confidence. Luring back investors poses a considerable challenge for Beijing, especially after a market downturn that wiped out over $6 trillion from the market value of Chinese and Hong Kong stocks since the 2021 peak. A structural shift is evident as both active money managers and passive funds increasingly turn away from the world's second-largest stock market. Additionally, Tuesday's announcement of details about a planned national security law in Hong Kong further impacted sentiment toward China stocks trading in the city. Economists anticipate Wednesday's data will reveal China's manufacturing sector remaining in contraction for the fourth consecutive month. While recent pledges provided some relief to China's equities, experts argue that additional measures are essential for a more sustained recovery. It remains uncertain whether the recent developments indicate a definitive bottom for China equities or increased global fund allocations. That is all the time we have for today. Tune in again tomorrow for the latest news update. Remember to smash the like button and share the video. Be sure to subscribe to our video if you like our content. This will allow our videos to reach a wider audience. Thank you for watching.